Hello, folks. Welcome to the State of the Market. This is David Russell, Global Head of Market Strategy at Trade Station. It's great to be with everyone again. It is Monday, March 31st, last day of the first quarter. So a few disclosures to start. I'm going to share a few disclosures also in the chat, especially things like the ETF prospectus page we have to show you some disclosures on the ETFs that we're going to be talking about because we use those to kind of take a look at sectors as usual. XLK, XLC, XLE, all of those sort of things, energy, financials, technology, all that. Okay, let me show you also our standardized returns of some of these ETFs. We normally talk about these spider funds here, but we might also cover a couple of others. Um, Especially, I think there's some important things to watch in the semiconductors. These are standardized returns. Great to be with everyone. Now, also remember that on Mondays, we actually do, let me get back there we go. All right, good. On Mondays, go to tradestation.com and go to Insights. And we do a blog post on Mondays that kind of recaps last week's price action, cover some of the main themes in the market. This one today, have tariffs ended the AI trade? You might want to check this out. We do outline some of the key points at the S&P, some things we're going to talk about. Are covered in this article, and just some of the kind of, I think, important things to kind of be aware of here. Now, I'll just quickly start off by looking at the daily chart of the S&P. Last week we talked about the zone. I mean, we were talking about the zone back here earlier, first half of March. We saw the potential for the S&P to stabilize here and rebound up toward that zone. We talked about it for a while. So those things played out more or less as we had kind of outlined as potentials. There's a 50% retracement more or less at the drop if you go on the Friday. So basically, that Friday at the beginning, which was Friday the 21st, down to the low, pretty much held the 50% retracement to the downside. So um, these things have played out more or less as we outlined. And so this is a daily chart to start of the S&P. I want to just kind of mention that because at this point we're kind of in a spot where you're ending the quarter, and it is now kind of a little bit less of a technical market and more of just a kind of unpredictable news-driven market to a certain extent. Um, I think you can say that we've priced in a lot of negativity. So now we're in a spot where, to a certain extent, the badness, so to speak, the negativity needs to really maintain itself. For example, we know a lot of allegedly, quote, bad stuff is happening, tariffs and other things. Now the question is, does it confirm? So now we sold the rumor, so to speak. And now the question is, do you buy the news, or does the rumor turn out to be as bad or worse than expected, in which case potentially the downward pressure may continue. And I think that's an important thing to realize here, is because we're always looking at not simply the technicals, but kind of what is the understanding in the market, and how much of that has been priced in versus how much is the pendulum going to swing the other way. So I think right now, like I said, we've had a lot of bad news that is now priced in, and we might need a lot more bad news to sustain prices at these lower levels. Um, it's also interesting that we had a lot of outside weeks on the weekly charts that we're going to talk about. Even though they were bearish outside weeks, when an outside week occurs, it can be a reversal pattern. Outside weeks in general, or outside candles, are reversal patterns typically. When they occur near the bottom of a range, that can also confirm that the range is holding and the potential maybe to the upside. So last week, even though it was a bearish week, um, it might actually show some signs of the market stabilizing. So I also want to mention that everyone's focused on April 2nd, but tomorrow there's also something. And I don't want to get into politics too much, but politics is part of what's driving this market. So you got to at least know the events. There's special elections tomorrow in Wisconsin and Florida. And, it just might have some kind of impact on sentiment overall in the market. I'm not going to pretend, I'm not going to try and say what that impact might be, but just in general, these are potentially kind of noteworthy events, even though they might seem like unimportant special elections. We're in a highly charged political environment here, and those could have a certain amount of sort of impact. There could be random court decisions that could suddenly, impact the market. Trump might tweet one thing versus another, or who knows? I mean, maybe someone gets pushed out of the cabinet because of some of the things that we've seen recently, and maybe that's viewed as a sign of moderation. So all of these are things now I think we have to realize where the technicals have now expressed a lot. You can find levels on the chart, but certain news events might happen in certain ways that suddenly everything twists around and comes to life and surges a certain direction. I think it's important to realize that because we always talk about technicals and the kind of levels and things like that. But there's a lot of things happening here, and I want to just kind of emphasize that at this moment, I believe that a lot of the levels and things we're going to talk about may be less important than some of these crazy events that may or may not happen, or people's reactions to them that may or may not be, you know, impacting the market. So it is interesting though also looking at some trade station data, and we are seeing more stocks making 52-week lows, and there are things that remain negative overall. So I think it's important to realize that some of the behavior in the market does continue to look like it did in the first part of 2022 when we entered a bear market. Nonetheless, even in early 2022, we did have some moves to the upside. I mean, even if you do believe that the market's heading lower over the longer term, we're at the beginning of a new quarter, there is some potential, for maybe things to stabilize, have some attempted rallies, and then potentially more downside. So I think one of the things here is that we're in an environment now that is really range bound, and ranges are more difficult. In many ways, your attention has to be more short term in a range. And I think that's really the key thing here is that, um, using hourly charts, focusing on the indexes might be a lot kind of more fruitful for people who are looking to trade actively and avoiding some of the things with individual stocks or even some of the individual sectors we're going to be looking at. So I also want to mention that look at the S&P here. We're almost flat actually on the daily chart, which is kind of interesting. One of the things I wanted to mention, I think is important to realize here is that, like I said, tariffs are the thing everyone says that matter this week, but maybe the elections tomorrow matter. But also, I think we're now in a spot where there's a lot of risk of earnings estimates getting cut and things like that. I've said this a lot, that executives are kind of in the mindset where now is the time to be issuing weak guidance, set a low bar, make your job easier, and then come back and beat it later. And that is something I think the market's, kind of aware of and looking at. It has happened a lot. So I also think now maybe it's one of these things where a lot of things we've said have panned out. So now we have to kind of wait and see what's next and just realize a lot of the sort of things that we had kind of anticipated have kind of played out as we had outlined, and now we have to see what the next sort of step is. And I think at this point the sort of expectation of the downside move now, a lot of that has happened. And if anything, I'm going to look here, it's 5,400 on the weekly. So the weekly S&P here. And I think right now it's important to realize that this is, this was a level. I was looking for 5,400, the September low. But we're starting to see now some potential for a bottoming above it. And I think that's important to realize. When you look at the low here, it was 55.05. The recent weekly low earlier in March. Excuse me. And we had a false breakdown under it today. We had an outside week. This would be where a bear market was. So all I can say is at this point in time, a correction, a quote, 10% CNBC correction is at 55.32, and we're slightly above it. So we're slightly holding above the kind of definition of a correction according to CNBC. So anyway, at this point, we are not following through to 5,400, and we have a false breakdown above that level. And maybe that's when we simply have to respect and recognize that at this point, unless something really bad happens, maybe the bad news is priced in for here, and maybe now things point the other way. So this is the S&P 500. Now the Qs are in a very similar sort of environment. They have not followed through to this low. And it's interesting to see them under this other weekly low here, which is going to be 466.43. So also something like this can turn into a false breakdown. It can turn into, it dives under and then it comes ripping back. And that's what you're going to see very often in a range bound market. So from my perspective here, this is something where, yes, it's broken under this level, but when you look at the overall sentiment, S&P actually just turned green as I speak. This is the sort of thing that might have some surprises to the upside. And everything we've seen recently of tech lagging, large cap growth, all that stuff lagging, things like that can flip around quickly in an environment like this. So I think we have to realize that is very much something that might happen here. A lot of these moves, let's jump over really quickly and look at the cues on the daily, because you might look at a move like this and we can say, well, how about we do a little Fibonacci retracement? We could retrace up, a halfway back up this drop would still be, about 10 points up on the cues from here, around 475 and a half. So, people who are bearish can still be waiting for a lot more space to the upside before they drop the hammer again. So I think it's just important to realize now this is a range bound environment. We might be simply in for a kind of frustrating, grinding, non-trending market for a while here. And in some ways, that seems to be what could be developing, unless the worst case scenarios do kind of pan out politically and everything else. We might be in an environment here where things are going to be range bound and difficult, which can be really good for futures traders. And that's when it can kind of make sense to just kind of lay out your levels on the futures charts and kind of be thinking in terms of a few hours at a time, not be looking for sort of things that are going to keep moving in any direction on the daily time frames. And that really does seem to be, I think, what this kind of thing would say here. From my view here, when we get into this environment, that the weekly chart matters less. This webinar, we mostly focused on weekly levels, but as things change, let's look for other things. I think daily here, you can see the daily up to 472, 473, the low of the 18th and the low of the 21st, that kind of weekly low in here. This was actually a pretty important level. You can see it was the Friday low, and then a Friday low on the 14th. Then it was the low on Tuesday, the 18th. Then it was the low on Friday, the 21st. This level now, I'd say 472-ish, and it's 472 three quarters, 472 and a half area might be the spot that people look for the upside here on the cues. Now the Dow, interestingly, makes a higher low. So look, the cues here make a lower low, and the Dow makes a higher low. So we could be in an environment here where the value trade kind of continues to see some performance. That kind of seems to be what we're seeing here. All these things are just chopping around. Let's go back over to the weekly on the Dow. Um, Again, all this is sort of this range bound sideways sort of thing. You can see the levels kind of coming out. It has a false breakdown under some lows, rallies back. This is exactly the sort of thing you see in a range bound market like this. This is why I think, again, it's important to be looking on the shorter time frames. The weekly chart here, when we're all tight together, is not going to give us as much. Now, the Russell essentially also has a false breakdown below these lows. And again, people might want to be just going and drawing a Fibonacci, from the high to the low and saying, hey, we haven't yet gone halfway back up. And that's what a lot of things here are going to potentially show, I think. Now, it's interesting, the 50% retracement on the Fibonacci of the Russell here in the weekly basically puts us right at the open of the on March 10th, and the weekly open the following week. So I'm sorry, it was the close on March 10th. So this was actually a level here. If you look at the close, the week that began March 10th, and then the next week that began on March 17th, there's a level right around here that closely matches 50% retracement, right around 2040-ish on the Russell. So people might look for a rebound to that sort of level. Range bound markets, you know, they're really not fun, and they're not very like gratifying. Like, you have some chart, you're like, wow, this is gonna rip, and it's awesome, it's gonna go. It doesn't go. It goes a little bit, then it stops, and it goes the other way. That's what a range bound market does, and you have to adjust your mindset for it. Just to be careful to think that to expect something to continue, we might have to simply be in a time frame here when we have to be trading more, longer. I mean, more actively, and simply be looking for, shorter term moves, and less of a kind of any kind of clarity on the longer term time frames. Now, I continue to look here at the um, actually, let me go back to the cues really quickly. I wanted to mention, not the Qs, the socks. All right, so the semiconductor index, I think, is important here because we did break under this level. And this, to me, is a very important thing. The SOX, Philadelphia Semiconductor Index, has a level from mid-April. And this remains, to me, very important because, remaining under this level can really kind of weigh on all of technology here. And I think it's something we have to be aware this is happening here. So let's see if we stay under this level on SOX for a while. It's $XOX on the TradeStation platform if you're using that. And if you want to mention, this might turn into a false breakdown with a rally back up. it might basically turn into something where it sits here for 3, 4, 5 days, and then suddenly, when you forget about it, the 10-day moving average catches up, or an 8-day exponential catches up, and then continuation to the downside. My view has been more that this market has more downside risk overall, and things like the semiconductors potentially have more downside risk. So I think we have to kind of realize that we are breaking an important weekly level here, but it doesn't mean that the follow through will happen today, or even this week, or even the next several days, maybe later this week. Materials here remain in a spot where we had noticed the lower high and the potential to push down to the lower low, but it hasn't happened yet. And even look here, I've seen these things happen when we're in these short range bound time frames. You think, you like, I've had many times I've done something like I'll short it up here, and I'll feel so good about myself, and it goes down, and I'll be like, oh, it's going to keep going. But then I miss the fact that it basically had this false breakdown under a recent low, and then it turns around and turns the other way on you. And I think also here, this might turn into a higher low, and then we might see materials go to the upside here. If we look right now, the dollar, things are pretty inert overall in the dollar, but there is this kind of sense of a stagflationary environment, things like gold doing well. And if we get into an environment here when stocks stop falling, but people are still thinking stagflation, we could be in an environment of weaker dollar and materials doing okay. If we're in an environment for a value environment, a value theme, people avoiding growth and focusing on value stocks, material stocks are mostly value stocks. So just bear that in mind. Now, that's the XLB on the weekly chart. So making a higher weekly low, we cannot deny it's happening, or at least it sure looks like it. And it has a false breakdown also. It's holding this recent low from earlier in March. These are the sort of things that turn around and suddenly can surprise you, going opposite, kind of what you might think. And so I want to mention that this sort of pattern could suggest more of a potential move to the upside in materials XLB. Now, communications continues to hold this level. And, from my view here, this is a very important level. This remains a strong weekly chart. However, we should also remember that mega cap growth stocks and things like that, if we get into an environment when people want value, when the Russell even outperforms the Qs, when the value outperforms the Qs and things like that, communications, even if the chart is healthy, might be an area that does not perform in that environment. So I think we're in a spot here now where people kind of have this sense that the mega cap growth stocks are kind of played out, and that does seem to be a more commonplace belief now. And it's also a highly people are highly concentrated in this area. So I think we just have to realize that and see that it might actually turn into something that is a little bit more negative for communications. It continues to hold this important level, but it doesn't necessarily mean it's going to outperform. Now, energy, on the other hand, is, a week or two ago on our market trends webinar, which we do on Thursdays, market trends webinar, we talked about how the energy ETF had the lowest PE ratio of any of the major sectors. If you actually go to TradeStation here and you click on, you can look at, let me just look on stocks, and you can see we do market trends on Thursdays. It was this one here, is our energy stocks taking leadership. We did it on March 20th. This article has a bunch of information in it. You can see we basically compare the different um, you know, sectors, and we see that energy is the only one trading at single digit. And it's been interesting to see that it does kind of continue to perform here. I do believe it's probably the best performer year to date. I don't have that in front of me now, but I'm pretty sure it is. So this is a spot where it has not confirmed to the downside, and this is an environment where, today, for example, when you look at energy, we see there was a report, I believe, from the Energy Information Agency, which is part of the American government, that basically said U.S. oil production in January hit the lowest level in 11 months. There's more talk about sanctions on Russia, attacks on Iran, things like that. Um, so there are some things happening here where people might kind of see potential strength in energy. We've said that in many ways, people looking for a true sort of breakout might want to be looking for something closer up toward a breakout above 98. 99. This is a long-term sort of thing on XLE. It's stuck at this level really from way back a decade ago. So this might be something that has some, potential to just kind of squeeze higher from here. From my view here, energy, it has refused to break down, and there are some potential geopolitical positives. Also, as a bullish, in the midst of here of a bullish inside week following this move to the upside with very little pullback. So this might be something where people look for this thrust that began in late February, early March to continue to the upside. Financials here, they held this low, and in many ways here, they basically are in a spot where it's hard to really see much here really confirming some downside in this. I think when we look at financials, we have to realize that a lot of them are not just banks now. There are these other companies in here, like certain kinds of property and casualty stocks that have actually turned to be a little bit more recession proof and less risky than traditional banks and stuff. So right here, financials remain one of the strongest sectors, and now in many ways, compared with even communications, in some ways they have the strongest uptrend on their weekly charts of all the sectors, at least that I can see. I mean, energy you might see a little bit greater potential in, but it's not as clear of a trend as financials. Industrials here remain in a spot where we had talked about the potential to kind of bleed down this range. Now, these remain actually a very expensive part of the market. I think, and I think industrials here remain in a spot where people may see continued risk. They have airlines which have like cyclical problems. They have manufacturing companies with all kinds of supply chain issues and a lot of potential exposure to government cuts. So industrials here are an area where they have been under pressure, and from my view, if you look at them, um, you know, basically held this recent low, but this is one that has a more kind of damaged weekly chart, and this might be one that people don't see much significant opportunity in anytime soon. Now, tech also here, the biggest sector in the market, basically has gone down to hold this level. As I'm pretty sure that I'm pretty sure last week we had mentioned the potential to move down kind of toward these level, but now we're kind of getting it. And there is also, again, you could draw 50% retracement and say, all right, this thing got smashed down pretty good. Even if I'm bearish, maybe I'm not a seller until we get over 209, and here we are under 205. So that's still a few points away from maybe a spot people would see as a high. So again, I think we're in a spot where a lot of negativity has been priced in, and even if people are more structurally bearish over the longer term, it might be hard to argue that the selling will occur at this level versus higher levels. So here we are setting up for a little bit of a false breakdown here under this low. I mean, you can look at the other low here from September. Again, range bound here appears to be what's happening on the XLK. Also interesting, last week, TD Cowen said that Microsoft was cutting its data center plans. We showed basically the stocks with the semiconductor index and everything else. So a lot of this news is now kind of less, much more in the market. And we had talked at different points about, we did a trading view idea, for example, about how Dell had a bearish flag. We talked about a lot of these things, a bearish flag in Dell, bearish flag in Broadcom, and stuff like that. And these things have played out. So now we're in a spot where there might not be much clear trend to the upside, but at the same time, the downside may be exhausted in these for now. Consumer staples here have been kind of an interesting outperformance. They had a bullish outside week last week. We mentioned how have been holding this level. From my perspective here, this is something where these are many ways contrary to the overall market. If we do enter a period when the market kind of stabilizes, it is interesting. I do remember, I kind of really started a lot of my career right at the end of the dot-com bubble in March 2025 at Bloomberg. And what's interesting is that was really when the dot-com bubble was ending. And it was interesting to see the outperformance in consumer staples for years after that. I think it's important to realize that if we are at the end of a big run in in tech, and say we, just for argument's sake, say we have ended for now the AI trade, consumer staples might actually be the sort of place where people go. It's more value focused, less secular growth. So I think right here, let's actually look at the retracement on this, because I think we might be kind of near. See, we went more than a 50% retracement down, but we did basically hold. If you look here, you can see this level from last May that we held. From my view here, this is something where people may actually think that this is now basically held that higher low. The market made a lower low. This made a higher low. So again, this might actually be something that's pointing in that direction. more to the upside, especially if we do enter more of a sort of value phase. Real estate investment trusts are also essentially made, depending how you look at it, more or less held to 50% retracement. They are not moving down the channel here. So from my view here, this is something where people may actually view this as a little bit more of a positive. Let's look at XLRE. And here what we see essentially is on the daily chart, people might actually see some potential here of this thing essentially breaking and breaking this downtrend. So um, overall here, value, recession, stagflation, blah blah. Those sort of things are right now, if it drives people away from the sort of traditional risk on growth areas like technology, real estate, consumer staples, healthcare, things like that become the kind of, safety blanket that people can feel more comfortable in. So at this point, I think we have to realize there are some potential signs here on the real estate investment trust. We had mentioned these some time ago when these were rallying. We talked about a lot of the potentially positive things happening fundamentally in these. And I think we have to realize that that may remain the case. Those things have not necessarily gone away. We talked about, if you go back and look at like JLL, which is a real estate management company, and CBRE, these guys manage office buildings. They made a lot of interesting positive commentary a month or two ago. Now these are just random stocks. So the overall thing is that these guys have a window into commercial real estate. So from my view here, look at real estate investment trusts. People might actually say this is actually a place I feel more safe in. It's not going to get hit with tariffs, and it's not as economically sensitive and things like that. So XLRE seems to be holding 50% retracement here, and not confirming a higher low. The market makes the lower low. Not confirming a lower low, making a higher low as the market basically makes the lower low. This is some potential relative strength that people might see here. It's interesting also. If we look all the way across here, I mean, these levels, there's so many levels, but the high in many ways, the weekly closing high from 23, we're more or less holding. We're more or less holding these levels from 2023. I want to just point that out. Now, XLU utilities, interesting also. We've drawn this basically falling channel and it's more or less stayed above it. So I'm going to actually take this channel away now and notice the fact that basically we're holding in this sideways range here. Also a non-cyclical part of the market. Look on the daily chart of this now. It's interesting also to see that this is also, a downward trend line, that if this gets above this, it gets much back above 79 and a half, 80. This could be something where there could be some follow through. So I think we want to watch for XLU potentially clearing 80. A daily close above 80 on this may confirm that this actually is in more of an uptrend. Um, Healthcare also, we talked last week about the way that healthcare was holding 50% retracement. Again, these are the value parts of the market. Go up here and you can see. Anyway, it's holding a 50% retracement. It's holding this level from mid-February. It's a value part of the market. It's a non-cyclical part of the market. We had talked multiple times about the fact that healthcare was outperforming at a time when technology was breaking down. So this is something here where people may actually see some kind of security here, where this thing holds 144. Now, XLY is, however, also in a spot here where it's kind of chopping and holding down here. But from my view, something like this, people got to be careful of, because in some ways it's gone down. It keeps testing down to these areas, and it may have some upside, and then it can just stall, and then people can continue to push the downside. They have Tesla deliveries are coming out soon. Steve will cut the estimates on Tesla, and as I look at it overall, I mean, people might say that bad news is priced in for now, but at the same time, we're looking at things here that are economically sensitive. They have all kinds of exposure to international stuff. The biggest one is Amazon in consumer discretionaries. They have all kinds of high multiple exposure to imports and tariffs and things. This may be something that people see trouble with. And you look at something like this chart here on Amazon, people may see space down here, toward 170 or lower. You look at something like Tesla, and you might say, yeah, it might be holding here, but at the same time, the 52-week low was lower toward 150. Not to say that that happens, but people might just see a lot of opportunity here for Tesla and Amazon to fill it and chop around. And if that is the case, then something like this also in the overall XLY um, simply becomes a kind of chopping no man's land. This is the daily of XLY. You can see this level here on 192, but people may look for more pushes down here. There's also the automakers in here, the home builders, all these kind of companies. In many ways, this is a sector that had this really big rally on the Tesla rally. And now, in many ways, people may look for this to kind of keep chopping and filling down here. So at this point, this doesn't give a lot of real clarity on much of a move to the upside. I got to very quickly touch back on the TNX, the 10-year Treasury yield. This remains to me something that is a risk people have to be aware of. Is that we continue to hold above 4%, and there is I mean, to see Treasury yields with the market kind of selling off as it has, to see them not moving materially lower, even with people cutting estimates on economic growth and everything else, this remains to me a problem that is not a great thing overall for risk assets and for the S&P overall. So at this point in time, with the market under pressure and fear and things, it's difficult to see yields really breaking much to the downside. But I think we might want to be on guard, because if things start to stabilize, this might be something that turns into a higher low and the potential for a bigger, more significant, longer term breakout to the upside in the 10-year yield. And if that happens, that is a potential negative overall for equity. So as I look at things right now, like I said, there's a lot of negativity at this point, essentially in the market. And it could be something where, if things are going to go lower, maybe they don't go lower now. Maybe we need some more time to kind of price those things out and let it really become clear. Let some of these news events pass by and see, do earnings come down as much as we fear? Are tariffs as bad as we fear? Or is this a spot that becomes something more of a kind of tradable bottom with a potential false breakdown? Last thing to just go back to, perhaps the most important thing, potential double bottom at 5,500 in the S&P 500 with a false breakdown, and now basically went from red to green on a Monday. Our low was made. Last thing I want to show you, let's go here. It's like a 5-minute chart really quickly. Where was our low? Our low was basically right here at 9:45 or so. So this is something that also the low occurred when a high or a low occur in the first on a Monday in the first, say, hour. It's often a contrary signal. So if the market hits a high on a Monday and then it fails to hold, that can be bearish and potentially the other way to the downside. So here we have the false breakdown. Let's just kind of point that out. So hope everyone has a great day. We will be back with market trends on Thursday afternoon at 2 p.m. Hope everyone has a great day, and I'll see you then.